Check, check, 1, 2.
No, there's no noise.
Oh, it is kind of funky.
There we go. All right. I think it's working.
Now it's good.
That's good enough.
We'll see.
I just joined. Nice to see nice to see myself. How are you doing, Elliot? All right.
Love it.
Do you want to start with the market update?
Oh, what's up, Tosh?
Yeah, sure. So if you didn't tune in last week, there's nothing really new to report this week. There is still more inventory than there was the last probably 6 months or so. We're seeing about 21-ish plus days of supply. So we're still way below an even market, which would be 6 months. But there's definitely more options out there for buyers than there were previously, which kind of sounds converse when I said the getting still good for sellers. It's just proportionate to where it was a while ago. So.
Exactly, yeah. Relative to 6 months ago, things are really nice for buyers. Relative for a normal market, it's just, it's pretty normal.
There's a chance you put an offer in as a buyer, you can get an inspection right now, which is, we haven't seen that in a while.
Exactly, but yeah, get used to that. We'd expect kind of the same trend for the next 3 or 4 months at least until fall comes around, but you never know.
All right. Should we get into the pros and cons of buying land?
The pros and cons of buying land.
Yeah, good sides and bad sides to buying land.
So the pros to buying land is, generally speaking, to hold the land is less expensive. It's proportionate. If you take the same price land, right? Let's take a lot that's $500,000 versus a home that's $500,000. The taxes you pay on bare land is lower than the taxes you pay on a property. So you're paying a proportion of taxes for your land versus the final property that you have, like a property. Pros with one of the cons of land is, unless it's agricultural, you can't really collect rents, so to speak. If it's agricultural, you can get farm leases on land, but you can't. It doesn't cash flow. It doesn't make any money, or like a rental would, or a property that you're not living in.
It's super low maintenance too. So in terms of investment, I know that most folks, when they think of investment, they think, oh, rental property. Well, some folks that, like for example, if somebody wants to relocate up here, but they want to invest up here, they might say, you know what, we can buy some land and it can be our bank account for 3 or 4 years. That's great. But again, it's not making you any money, which can be a downside, but the upside is it's not really costing you much. There's no plumbing issues. It's just dirt. There's not a lot of things that can go wrong with dirt. So it's relatively low maintenance. But again, the downside of that is it's not going to, unless you rent it out to put Airbnb campsites on it, it's probably not going to do too well.
I think one of the other misinformation things about land, and when I say land, there's different types of land. You have building lots, you have agricultural land, you have just raw undeveloped land. One of the things that people think, they think, oh, I can buy a lot and I can just sit on it and not have to do anything with it. That isn't always the case. That is sometimes the case, but isn't always the case. If a lot is in a subdivision where they have CC&Rs that require you to build within a certain period of time, you can't bank that. A lot of people think, oh, I'm just going to buy a piece of land and take it forever. You can do that sometimes, but it's not often that you can do that. And that's a kind of a misconception, I think, for some people.
And last thing, I think one of the cons that can happen for folks is, depending on what people expect, going into land typically costs a little more money down-wise. So just to get in on a loan, the bank likes to see that you have more funds up front and down payment. Whereas you buy a primary residence and it's a house, you can put like 5% down nowadays. Maybe even lower, you can go like 3%. You get land, they're going to be like, hey, we want 25, we want 30. In most cases, that can change.
Okay, let's go over some of the best practices for buyers today and how the best practices changed over the last 6 months.
Best practices for buyers today.
I would say relative to 6 months ago, because if I met with someone 6 months ago and I was filling them in on the market, something that was super beneficial for folks to get used to was talking about waiving certain things. So being able to waive the appraisal contingency, if you know how that works. Inspections we don't typically waive, but I would say overall you were willing to sacrifice a little bit more to purchase 6 months ago. You try to purchase now, you don't have to sacrifice as much. Appraisals are actually catching up. Appraisals aren't as scary as they were 6 months ago because prices have been more steady. It's not as scary to have to sacrifice some of that.
I think, and core best practices that don't change too, and I've had to we still educate clients on this, is you need to know your financial situation before you go looking at homes. Still, people think because things, it might take homes might be on the market for a couple of weeks versus a couple of days, that they can just kind of, roll into a property and have no idea how they're going to actually purchase this home, but have the dream of doing it. There's nothing more heartbreaking than falling in love with a home and having not done your due diligence, figuring out, okay, how much you're going to fund this purchase. So being pre-approved or knowing where your cash is at if you're a cash buyer are two important things for sure. That hasn't changed. That's still the best practice. Always know where you're at. with your finances, because you do not want to fall in love with something and be like, oh, this is the best, most perfect home, and you're just a week too late getting your pre-approval figured out, and someone else beat you to the punch. So
Exactly.
So yeah.
Yeah. We have a user submitted question if you want to go over that. If not, we can move
Jake,
forward.
that's a good question.
That's a great question.
It's every day for me. I hear it.
What's the question? They're not the people.
Oh, sorry. Question for Dusty: did your modeling background help you jumpstart your real estate career? I've never been a model. I don't know what you're talking about, but I understand why. Maybe you think I would have been one.
I'm just offended that I never get asked these modeling
questions.
Because I'm basically a Walmart version of The Rock. If you can't see the resemblance,
you'll see Elliot. You'll see Elliot a lot of big and tall places though pretty soon.
Yeah.
Right next to Shaq.
Yeah, right next to Shaq, and I'm still
In The Rock.
Shaq. In The Rock. Yeah, I'm just a Walmart version of The Rock. But hey, you get some good stuff at Walmart. Don't discount it. When I was in college, I got all my stuff. I still get stuff from Walmart. I'm not gonna lie. I have dishes in the counters from Walmart. You got to do what you got to do to survive. Question: has the track meet been rescheduled, and when is it? Well,
that's a great question.
For those of you that don't know, not last week but the week before, I conveniently came down with a bout of COVID. That's not a joke. I did actually have COVID. Lost my taste and smell, and as you know, for the big fella, that's a problem because I like to eat. But all that being said, we haven't rescheduled it yet. I have to check with my medical team and my trainer first to make sure that I'm at a safe level to compete, because obviously as an elite athlete, I'm an elite 400 meter track runner. What are you laughing at? As an elite 400 meter sprinter, it's very, very important that my ATPC system is firing at over 90%. And right now with COVID, I'm not sure if that's going to be possible.
That's true.
I mean, worst case scenario, put it this way: if I did run it tomorrow and my lungs aren't as good, I'm probably going to run a solid 42-second 400 versus the 40-second I would run without COVID or long COVID implications. So,
I think aerobically he'd actually be okay. I just get worried about his Achilles and his hammies being able to sustain any sort of power on that.
I'm not going to lie, actually. I went to the gym last night. It was my first gym or leg session back from COVID. It's actually my first leg session in quite some time. I won't tell you how long it was. I did 2 sets of RDLs. My hamstrings were going to snap after the third one, so I had to pack it in and go home. So I know my limitations, and that's the main thing. You've got to know where you're at.
Dixon, you got a good question. Austin Dixon, thanks for joining us. Nice to meet you.
Yeah, nice to see you, big
What
man.
would you tell a buyer who wants to find a deal? It's a great question. Finding a deal is interesting because finding a deal is extremely relative. Now, it's beneficial for folks to know. You find a deal 6 months ago, let's just say you got in at market value 6 months ago. That's a great, great deal now. It was probably a great deal a month after they closed. So you get something at market value now with how much things are appreciating, it's still a deal in a few months. Now, even if you're saying, well, I want to get something below market value, my big, I guess, coming from experience, I would say the biggest thing to prepare yourself for is if you're looking for a deal, you're going to have to sacrifice something else most of the time. Maybe you wanted that 1,200 square foot house, be open to looking at more 1,000, 1,100, things like that. So finding a deal, it's all relative to the market, but be prepared to sacrifice a few things you don't necessarily have to have, but just keep things in mind that you need.
In my experience too, finding a deal is relative to the person, not just the actual market, because I've worked with people before that they have to feel they've won, and winning doesn't necessarily mean that you got it at a certain price. If the other side, and I teach this in an Elevate class that we do, so at MS Madison at the brokerage, we teach a negotiations class, and I've taught people about how value is sometimes a deal and how people perceive value. So if a buyer is, hell-bent on trying to win, so to speak, for me to win for them, as agents, we could not run a CMA representing a buyer, for example, on a home. That's a market analysis before they put an offer in. They could pay maybe 20K more than what the home might be worth, or at least what the comparable properties show. And as long as they get a fridge thrown in or something, they feel that they got a good deal. They felt they won over the other side. So it's not always price, I don't necessarily think, that makes a deal a deal. Sometimes it's really what value they perceive they got. So anyway, what question is this? Big Dev. Big Dev's got a question for us. What do you say to someone who asks the age-old question, will my home appreciate in the next 5 years? I answer that with how long's a piece of string?
Yeah. Especially with 5-year increments, I think a lot of folks, especially with how quickly things moved upwards about a year ago, people think, okay, well, if something can move up that fast, that means it's volatile on both ends, which means it could drop just as fast. Keep in mind, real estate, when you're purchasing or even selling, I think it's beneficial for folks to look at it in 2 or 3 to 5 year increments. Telling yourself, for example, in 2023, we're going to see prices that are a lot more than they are now. Now, how big that is, we don't know yet. But a lot of folks in 2023 are going to say, man, imagine if I bought a house in 2021, how much money I could have saved. So like again, it's all relative. Looking at it in 2 or 3 increments can be helpful because it helps you go, okay, 2021 is probably better than purchasing in 2022. Now, if we're judging July versus November, we're kind of looking into kind of the minutiae of things, but keeping things in a bigger scope, I think, can help people.
So, good answer. We got a question
Hey,
here.
what can I do?
Yeah, you're perfect. We got a question here from the big Aronsky, Mike Aronsky down there in Hermosa Beach. Thanks for joining us this morning. And he says, what is an emerging or this is a great question. What is an emerging or speculative sub-market for us out of state investments? High risk, lower entry.
We got a lot of answers.
Yeah, I mean, there's certain areas, and Devon, who's not with us today, would always talk about this one. And it makes sense in any market, really. So places like Emmett. So Emmett is just northwest of Boise. It's about 40 minutes that way. Emmett, I would say Midland's not even really emerging. There's a couple of smaller kind of towns around Boise where the barrier to entry to get into these investments is low. But it is higher risk because they're not as developed. Places like Emmett, that's kind of, like I said, to the northwest, take that for an example. I haven't got data to show you right now, but I know that there is a lot more development happening. Higher risk to an extent because there's still a lot more development that has to happen to make it more attractive or more populous, which kind of drives some appreciation. But the housing prices are definitely lower than here in Boise. So if I was an out-of-state investor, I'd be looking kind of toward Emmett, especially. They're going to be making a lot of kind of highway improvements up there. In the next couple of years, which will make it a kind of main thoroughfare when you're going up towards McCall and kind of the other kind of destination places up north that people travel up towards. So that would be one I'd be looking at for sure.
And if you're focusing on just the Treasure Valley, or specifically even if you said within 10 miles of Boise, the little submarkets, that could literally mean little neighborhoods. My two, and you'll hear me talk about this probably for years, and I don't think it'll change, is the Boise Bench and then Garden City are 2 areas within Boise that, yes, first-time home buyers can enjoy it and enjoy the actual quality of life out there, but strictly judging by the numbers. If you look at the numbers in the Boise Bench and Garden City, there are areas that, and a lot of you can picture it if you haven't lived here, the Boise Bench and Garden City are both areas that you can drive down one road and be really impressed, and you can drive down the next road and say, okay, maybe it'll be there in 5 or 10 years. For an investment, that's where you want to look for. Caldwell is similar to that too. Caldwell's 20 minutes west. But out-of-state investors, I'll always prioritize Caldwell, Boise Bench, and Garden City because they all have that characteristic of a high ceiling, but people are starting to discover it right now, which in the grand scheme of things, we're going to notice it's actually pretty early for the Boise Bench and Garden City. It's not like we've gotten even close to their potential. So
I think Caldwell's a good one that we kind of overstated there too. Caldwell's Canyon County's median purchase price is about, I need to check the exact numbers, about $120,000 to $150,000 median less than Ada County is. So Canyon County is obviously Caldwell and Nampa, the 2 main ones, Ada being Boise, Meridian, Eagle, the main ones there. So a lot of people that were renting and wanted to buy a home have moved out of Boise because it's just not as affordable. So Caldwell prices have been rising too. So I consider Caldwell more of, you talk, Mike, about high risk, lower entry. Caldwell's kind of the medium, almost kind of happy point. It's like medium risk, medium entry, if that makes sense.
yeah, that's a good point.
I think Caldwell's a good one too.
All right. Let's wrap
Love
it
it.
up.
Great question.
Well, yeah, thanks for joining us again for another Tuesday.
That was big.
I don't know what's it called, coffee and just us hanging out.
I don't know,
market
Tuesday
updates,
coffee, yeah.
just talking crap. So yeah,
See you next week.
we'll
See you guys.
see you again same time next week.
Thanks for joining. I love all of you.
All best.